So we just had a brief introduction of the inventory account. And in today's class, we're going to talk about, first of all, what is inventory and what are the types of inventory. And then we're going to keep track of the inventory system. To keep track of inventory, we have two inventory systems. One is called perpetual inventory system. The other is called periodic inventory system. So what are the differences between the two? For perpetual inventory system, the firm adjusts inventory record continuously. That is what perpetual means. So every time there's a sales, the firm needs to adjust cost of goods sold and cost of the ending inventory. Versus periodic inventory system, the firm only adjusts record at financial reporting period end. And then to calculate the cost of the inventory, we have actually a 2x3 combination. So here we have to introduce something called cost flow method. What is cost flow method? If you still remember from your introduction financial accounting course, you may remember there's something called average cost, LIFO, FIFO. So those are cost flow method. So depending on the cost flow method the firm used, also depending on the inventory system the firm uses. The inventory system, as we just mentioned, it can be perpetual and periodic. So depending on these two, we actually have a 2x3 combination. So those are 6 situations. Under each of these 6 different situations, the cost of goods sold and cost of ending inventory. So cost of goods sold is on the firm's income statement, and cost of the ending inventory, that is on the firm's balance sheet. Those two accounts, the balances on those two accounts may be they can be different under each of the 6 different situations. So we're going to talk about it in more detail in today's class. And then we're also going to talk about LIFO reserve. So what is LIFO reserve? And there's also something which is called LIFO liquidation, which we are going to cover in today's class as well. So what is inventory? Inventory are assets a company intends to sell in the normal course of business, has in production for future sale, or used currently in the production of goods to be sold. Or in other words, it covers kind of like, so this is finished good, has in production for future sale, work in process, and raw material.